Gap opened up down. Tiffany didn't do so well. Riggs is gapping down. Some of the big leaders yesterday. AMR, forget about it. It's bankruptcy. Some of the commodity related names, Dillard, some of the retails. This is the Gap open down list on the NYSE. Quite different. Some are earnings related. But nonetheless, the short side of the tape is possibly in play on that opening bell. They marked down the put options yesterday. As you can see, clearly the 580 put was marked down 1275. The 585 put, where Google is right now, was marked down 16.83. And they marked the asset. They always mark calls and puts down. You've been learning so. Now, let's take a look at the 370 call that was marked up 445 on the on this particular call contract right here. I would start looking at the 375 put on Apple with the 380 put in the money. Yes, I would. I would be on that. I would be watching this call option here. So that's what the NYSE is doing. On the Gap open up, on the other hand, you've got some good news, but you don't have that big of a gap today. Not like on 11/28/2011, yesterday morning. That gap that we went through, that was a different gap. Today's a different. Hey, yesterday was yesterday. Now is now in the price action. It is the 29th of November, 11/29/2011. What are we looking for? We're looking for liquidity ratio entries within the broader Wall Street tape. And that's everybody. Do people want to own equities at the end of the month? Do people want to own equities starting going into December, moving forward? Do they believe everything? Between who believes what? Between the bear and the bull. That's the Gap open up list right there. There's another thing that we're going to show very quickly. We're going to let the markets open today, and we're going to take the call and put ratio today versus yesterday's huge gap open up that you were trained on. And the gap open up on the Nasdaq comp, that GOLD, one of our stocks that we were mentioning to you this morning, ONXX, a potential buyout candidate. Not only that, they got applications going in. Keep your eyes on this one moving forward. Throw it in your MMT platform. That's the gap open up. Not very much today compared to yesterday morning's gap open up. And what does that tell me about the tape? It tells me one thing. I've got a gap open down. It's not real big either, because it's not. And that's on the Nasdaq pre-market. And trade management will be different. Once again, I'm going to be very, very forthright that when equities go up and hit resistance levels in the leadership names, that's all of these names. They had the big, huge gap open up, and we go up and hit those resistance levels, and you get a half bar where it slides half of the bar. But guess what happens? At the intraday high top, the buy-side liquidity ratio is weakening. And how do you confirm? A closing bar below the previous 3-minute closing bar that you go down, you can come up and hit it as resistance. The qualifier for the short ratio is that you must have a 3-minute reversal bar up at the intraday highs, whether that be on the opening bell, whether that be later in the day, it doesn't matter. You will have levels of intraday highs. And what we're looking at is where that tape changed from yesterday. Huge gap up. All the problems were solved worldwide, according to the gap yesterday. So yesterday's gap opened up, and now we're working with hardly any gap. And we have some positions on here. We have a $600 call on here. And the thing about it is, we're going to want to sell that call at $10.50 on the 600 on a limit order out. That's right. And this is live here and now. That's right. So have the limit order out on it. And that would include the new account. So sell the 600s. One of the things about the gap open up today is that it's not as big. That means that the one-day short cover squeeze that happened on Monday, gap open Monday, is what a bull needs. You need those gap open up Mondays, and that was the first one in the time cycle, MMTs. The other thing is learning the format of the bid and ask liquidity ratios within the full range traded, today's price action range. When we have the clear, comprehensible entries at the lower levels, and that the comprehensible part of it is, well, why do I get to buy the stock $2 cheaper? Why do I get to find out where the strong price support is? Why will I understand when they bounce off that support level from yesterday's huge gains across the board now? Is that you would look at a diminishing price pullback. If that is the case, and you have a 3-minute buy action bar that clears the previous half bar with your entry, with that breaking higher in your application, your SMF trading platform, when you break higher, you want to see that bar break 3 teenies higher, or at least 2 teenies to qualify. And they pull back, they hold it, they consolidate. But if the move is on, you're going to get that 3 teeny breakout, and you're going to get another bar that goes with it at the reversal to the upside reversal. So when turns are made, they must be validated with strong movement. And that is the trade management. It is a pre-market management. It is a risk management. It is entry management. They marked up these calls $14.10 on the 570. Yes, they did. I'll be putting in some other options here. We'll be looking at the 580 call here. Okay. They marked it up $9.60. The 575 call, they really marked this one up on Google yesterday, 1160. But remember, the last liquidation processes that took place in the last 10 trading days was part of the call side getting marked down to such deflated areas where you got a liquidity re-leveraging from the deleveraging process in the calls, and they had marked up and inflated the very short-term price action in the put side. Now you can see how they are marked down. Okay, this Apple call, look at that 380 put, look at that 375 put, 87,000, 4,000 shares only in volume. Yesterday morning at this time, you had 31,000 shares in pre-market volume. Pre-market volume is going to affect how these call options open up. Pre-market volume, pre-market volume, pre-market volume. Pre-market volume on all of them are lighter today than yesterday on 11/28. Pre-market volume, 100 shares on Priceline. Well, heck, I'll tell you what, put a limit order out there to buy at 466.75. If he walks away and your order's there and you get hit, kabam! The close was 472. So, once again, the trade management is, what is the second day going to bring? And how will the call side retain its markup from yesterday And how will the put side respond with the big markdown? Remember, inflated calls, inflated puts, they all work the same. We're here on the opening bell right now.